Morning all, how are we all doing? Happy Monday. Morning Evil, Michael, Virginia, Sarah, Steve, Gregors. Where is everybody else? Nobody here. What's going on? Monday. How are you all doing? Waiting for a lock with your boat. Very nice. Morning Kennelly. Right, so it is Monday. We've got a big week of news this week. Lots and lots of interest rates this week. Well, say 2 interest rates and inflation. So big week this week, but it all starts on Wednesday. So not expecting a huge amount of movement today or tomorrow, but we will see. We've got Jordan speaking this afternoon. Unlikely anything come out of that, but you never know. Might do. Afternoon, Johan. Morning, even Gav, John. So let's start off with the weekend news. I haven't had a scan through this yet. So let me just quickly go through. I'm just looking for anything to do with Japan at the moment. Doesn't seem to be much. Prioritizes issues of CDC. No specific timings on. School. There. When's this morning? Okay, so nothing else over the weekend at all, really. So the only news we've had out of Japan has just come in this morning, just before 8 o'clock. So again, it's same old stuff. Current yen weakness is excessive. So a little bit more, but that's not coming out of the Bank of Japan. That's out of some businessman. But anyway, it's basically, they are still keeping an eye on it. But there's no other news over the weekend from the Bank of Japan. As you can see, we are back up at the highs again. So we had this move start on Thursday, continuation on Friday. Looked like we were breaking the lows and we were off and everyone was going to start buying the yen. And then Friday, they undid the whole lot. Now we're back up here again. Threatening intervention. So it's just been one of those things, this yen move. It cannot get started. For some reason, they just cannot either break it or intervene or do anything with it. It's stuck. So this is now day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Day 14, 3 weeks of trading. Totally sideways, unable to make a decision on whether or not they're going to push the yen or not. So, as I've been saying for the last 2 weeks, maybe this week. What can we do? Tomorrow, on Wednesday, we've got the CPI for the US. So, if that inflation figure comes out higher than forecast, the US dollar will likely pump. If the US dollar pumps, it could well be a good 100, 200 ADR move. If that happens, the Bank of Japan should really have no other option than to intervene. So, if the inflation figure comes out lower than expected, that will speed up the drop in interest rates, or at least confirm the drop in interest rates for June, which means that the US dollar will come down. So Wednesday really is our key factor this week when that CPI number comes out, which is why I've decided to stream for the CPI number instead of for the interest rate decision, because I think that's going to be more important this week than the Bank of Canada. So that's where we are with the yen. So let's have a quick look at the week's news. So 3 o'clock tomorrow, Wednesday morning. So today we've got Jordan speaking, won't really do anything. Tomorrow there's no news. There's no live streams tomorrow. No point, because there's no news basically, and there's nothing really going to move dramatically, or shouldn't, before all this news comes in on Wednesday. So tomorrow should be a dead day. So we've got the New Zealand interest rate on Wednesday. So that's forecast to be a 5.5. The last interest rate decision we had for the New Zealand dollar sent it spiraling out of control. So that was back Aussie New Zealand. It's easier to see it. So that was back here. That basically was a 5.5 on a forecast of 5.5, yet they decided to absolutely destroy the New Zealand dollar off the back of that. So since that interest rate decision came out as expected, we've had nothing but weakness on the New Zealand dollar. It's been really, really weak. And so is the Swiss franc. So this is why this one's gone sideways. But if you look at all the other pairs, real weakness on that New Zealand dollar. So that 5.5 is expected. That is the forecast. That is what we should get. There's absolutely no reason for the New Zealanders to change that. They are up at very, very high interest rates. It's the highest joint with the US in the world. Their inflation is the highest in the world. Their inflation is coming down at a fairly decent rate, but it's still absolutely miles behind everybody else's numbers. They are in a recession. Their unemployment is going through the roof. If they put that up, that goes down. That's not going to happen unless they just want to blow their economy up. But that's just not going to happen. So it's not going up. It's forecast to stay where it is. And I don't see any reason why it shouldn't do anything but come out as a 5.5. Neither does anybody else. So in theory, what that should mean is nothing. It should be a whipsaw, which is what we tend to get when the expected number comes out. And there is no reason to change. There's no forecast for it to change either. So that's not what we got last time. The market just went complete free fall on the New Zealand dollar. So unclear as to what's going to happen with that on Wednesday. But that's your first major news event. Hopefully, they will start to undo some of this move. So obviously, they've been dropping the New Zealand dollar for over a month now. Hopefully now they will start to maybe switch and do a little profit take move on it. But we'll see. So that comes out at 3 o'clock Wednesday morning. Then we've got the CPI figure for the US dollar. So this is the big one this week. The forecast is for inflation to have dropped month on month. The annual inflation should have gone up by 0.2%. So there's two scenarios here. We do not get the drop on the month on month, and that comes out at a 0.4. So it hasn't dropped anywhere. That will probably be bullish for the US. If we get an as expected result on the year on year, probably slightly bullish for the US. If any of these numbers come out lower than the forecasts, it should be bearish US, which means that basically we are undecided at the moment on this June interest rate. At the moment, they keep saying June. That is when we're going to start dropping the interest rates, which is not far away. We're in April now, so it's only 2 months away. However, the market's 50-50 on it. So what we need for the market to have more confidence in that interest rate dropping is for inflation to drop, which means that that gives the Fed more opportunity to definitely drop that. So what we're looking for is negative numbers, which is US dollar weakness. So if you've got any long positions on the US dollar, those come out as negatives, you might find it difficult to get out because when the market starts to move against the US, it will probably continue to do so until June. But we'll see. So that's an important one. If we get an as forecast, it leaves the market in the same situation as we have been, which is 50-50 as to whether or not we're going to move in June. So we don't know. 145, 130 is that. 245, sorry, is the Bank of Canada rate. Same as New Zealand, 5.5. We're expecting a 5. There's no reason we shouldn't get anything but a 5. They've been frozen rates for the last year, as everybody else has. They will be following suit with the US dollar. So again, this number here will affect the Canadian dollar quite dramatically. If that US goes for a run in either direction, the CAD will go as well. But the CAD will not go until it's had its interest rate confirmed and that press conference. So the press conference, whenever you see an interest rate release with a press conference after it, that isn't going to move the market. That is because we know what that is. That's forecast. We'll get either better or worse or forecast. But this is where they get the information out to us as to what they're going to do for the next 3 months. And that's what the market's interested in. Are you going to increase or decrease your interest rates over the next quarter? If you're going to increase them, we're going to buy the Canadian dollar. If you're going to decrease them, we're going to sell the Canadian dollar. Let us know. So that's where you get the information coming out from the central banks. We've got the FOMC meeting minutes as well coming out at 7. Obviously, going to be dependent on what happens there as to what happens here. But that's coming out in the evening as well. It's not a press conference. The FOMC meeting minutes and FOMC press conference are very, very different things. The meeting minutes is just information as to what the forward guidance is going to be, which doesn't tend to really ever give us anything interesting. So what we tend to do is get a whipsaw off the back of that. It's the press conferences that we're interested in. So that's Wednesday. So that's the big day this week. This is when all the movement's going to come. Then on Thursday, we've got the euro rates at 115. So again, same thing for the euro, 4.5. We're waiting for the US to move. There's absolutely no reason why the Europeans should be dropping their interest rates sooner. They are very close to that inflation target. So the main mover for the euro is going to be the next CPI number that comes out. However, Lagarde might come out in the press conference and say, assuming that we continue on this path, we will be dropping interest rates, and that will drop the euro. So they are very, very close to recession. They have to be careful with this. They have to get this down as fast as they possibly can. Unemployment is through the roof. So they want this down as fast as they possibly can. However, they don't want to do it until they're confirmed that they're definitely going to get that 2% target hit. So we've got the rate coming out at 115. After that, in 15 minutes later, we've got the PPI figures, which is basically the producer price index, which is the same as the consumer price index, but for kind of commercial purposes. So that's a very important figure as well as that. We've got the unemployment claims also being released at the same time. And then 15 minutes after that, we've got the ECB press conference. And that is where we're going to get the forward guidance from Lagarde. So this one could be a big one because we're getting very, very close to that June date, which is when the US are going to move and everyone else will tend to move with or just after the US. So the interesting thing here will be to see if Lagarde is more bullish or bearish than the US, i.e. we may go before the US. So if this CPI figure comes out high, what that means is the US will be pushing their interest rates back, potentially from June to July, maybe August. If the ECB comes out and says, well, we're happy with the way that our inflation's going, we're probably still going to go in June, we'll see a drop in the euro. So this week could be quite critical. These numbers are very, very important. The closer we get to that interest rate forecast decision, the more important these numbers become and the more volatile the market will get and the bigger these explosive moves could be. So we're just waiting for someone to say something. And obviously we've got this press conference, we've got the Canadian press conference, we've got two major inflationary figures for the US this week. So big, 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 big week. And then the week's over. So the whole week revolves around Wednesday and Thursday. And then on Friday, we've just got GDP for the pound and the University of Michigan. In the grand scheme of things, UOM is going to do nothing compared to what we've got this week. So, so very, very busy week for news. So live rooms this week, I've decided to do CPI because I think that's going to be the biggest one this week. Obviously, the euro rate, which encompasses US PPI, US unemployment, and the ECB press conference. So that is all happening within 45 minutes of each other. So I'll be on for the whole lot on Thursday. And then Friday, I'll do a morning session. So no stream on tomorrow. Be able to get on with some other stuff. So that's the news this week. So it's a massive week. This morning, we'll whiz through all the pairs, have a look at everything, have a look at where everything is, where it's all going. Everything is still very, very, very stuck at the moment. We've got a few ADRs today, but everything's kind of flip-flopping all over the place as usual. So we'll see where everything's likely to go, see if there's any opportunities to jump into any support resistance-based plays. But at the moment, everything is going to be on tenterhooks, waiting for that US dollar CPI number and waiting to see what Lagarde says because, you know, they're biggest currencies. So we've got two major news events from them this week. So any forecasts that you look at or any analysis you do, anything you go, oh, that looks good, this is going to happen, this could potentially do this week. Wednesday, Thursday, it's either doing that. Yeah, it's just, you know, does technical analysis is great. But when we're in a period of core fundamentals driving everything at the moment, technical analysis goes out the window. It doesn't matter if there's a support line that's been respected 3 times. If that news comes out negative, that's getting broke. So you can look at stuff, but, you know, it's kind of, if anything happens between now and Wednesday, great. If not, Wednesday is when it's all going to move. So the likelihood is this week we will see this until we get to Wednesday. So short term support resistance will probably come into play. So daily highs, so yesterday's high, yesterday's low, last week's high, last week's low, those sorts of levels are probably going to get respected if the market can reach them, because it's not going to want to start doing breakouts ahead of major news events that we've got this week. So we'll have a look through stuff. But today we've got Aussie dollar Swiss as an ADR hit. This isn't really one, if you look at the New Zealand dollar Swiss and that as well. So Swiss franc, basically a little bit of weakness again this morning. But if you look at this wick, so my broker specifically, is gapped down today, and then we've had a whacking great wick put in. So it's not really an ADR hit. If you look at this actual price action, itchy nose. The first sort of 20 minutes or so of this morning is just a big old movement of nothingness. So all they've done basically is they've gapped down about half an ADR. So this is probably half an ADR hit, really. It's not really an ADR today, that one. The others you got are New Zealand dollar Swiss. Again, same thing, New Zealand dollar Swiss. It's just a gap fill. So that's really all the market's done. So I wouldn't really class that as an ADR either today. And US dollar Swiss, again, same thing. So these three ADRs really today, not ADR hits, because it's all to do with just the gap in the market, which isn't real price action. So we'll look at the RSIs, of which there are no hourlies. We've got a couple of 4 hourlies. Aussie dollar CAD, H4. Pick the right chart. H4 extension. We know about this one. Huge extension. This thing hasn't pulled back for a long time. So we are due a pullback on this. You can see I'm targeting a 50% retracement on this at the moment. We're up at a previous monthly high as well, which we respected on Friday, but it seems to be having a crack at it again this morning, pushing through. Look. So we had a lovely reaction off of that on Friday. Looked like it was going to start a pullback, but hasn't so far. So this whole move here, we've had no profit take on it yet. So looking for some kind of pullback at some point soon. We've also got Euro CAD. Again, it's all Canadian dollar, basically. Canadian dollar weakness. Same thing, looking for a pullback. Nice weekly resistance. We've got a monthly resistance. We've got this area here that the market has struggled to push through. Yeah, so anywhere from here, up to ADR today, it's a good area to sell from if it doesn't just come down from there. But again, we've got Canadian rates this week. So, if it just does this for 2 days, it's the Canadian interest rate and the US CPI that's going to decide the direction. So what would be lovely if it got up to there, where you've got some limit orders going to trigger, and then the news comes out negative. This thing will be back down here by the end of the week, which would be a lovely short. But these you can't really read anything into either at the moment. So we're up at weekly highs, 2 week ago high, which is that propulsion move, which is that break there, which they're retesting again. So nice looking short on the pound CAD. But again, anything you get into today or tomorrow, it's probably going to move into your favor a little bit or move against you a little bit. But realistically, that's probably what's going to happen. So anything you get into today, you're probably not going to be able to get out of it until the news comes out, which will either take you into drawdown and need an additional position, or it'll take you into profit and you'll get out of it. So a bit tricky to trade anything really on the Monday and the Tuesday when you've got a week like we've got, with absolutely no news for 2 days and then a bucket load of news on Wednesday. So, there's no bank or institution in their right mind is going to go, I know, let's start a big move today, because they could get the wrong direction, in which case they're screwed towards the end of the week. So it's just not going to be very interesting this week for Monday, Tuesday. Aussie dollar, US dollar, we'll have a look at that in a sec. I'll start on the Aussies. Raheem, saying Aussie dollar, US dollar 3 times isn't going to get it happening any faster. Morning, Ismet. So Aussie dollar CAD. We looked at this one already. I'm going to whiz through all the pairs in order. So Aussie dollar CAD, we're up at the monthly high, which we've had another go out with this news event, which got rejected. So this is where we started that sell move from, and we got this level here, which we've sold out of as well. So big push up into the highs at the moment, and Friday we got the reaction, and today we are potentially putting in the second leg of that M pattern reversal. So there was your reaction on Friday. Limit orders triggered there. and rejected that level. This morning, we're testing it again. So we are just breaking that high. So potentially that is where you're going to get that M pattern start and then push back down again. So this is nicely range bound at the moment. This area of accumulation, which is this propulsion gap, which we broke, has respected there, and we're back at it again. So if we do break this level, obviously you've got a load of accumulation you've got to get through there, and then you're running into another batch of accumulation as well. So there's going to be sellers in here, which we know because we've already rejected, and there's going to be sellers in here. So it'll be scaling in up to there if it breaks the highs and then get out, because that won't have done a pullback on that entire leg, in which case then we'll be looking for a big exhaustion move. So Aussie dollar CAD shorts, I've already got one short on that, which is the H1 extension from Thursday last week, which is there. So I got in there, looking to target that propulsion gap at the moment. I'm right up at my second short level here. I think I'm going to struggle to get on. I might just take one, actually. Yeah, just going to go short. So I'm just taking a second short there. So might struggle to get that on. It's a beautiful resistance, double top. So I can get out a little bit higher. I mean, it's unlikely I'm going to get out of it by Wednesday anyway. So I think I'll probably just leave the target where it is. And if we can get a big strong move on the Canadian dollar, that'd be a nice little profit. So that's Aussie dollar CAD. Aussie dollar Swiss. We had a lovely sell on that on Thursday last week off the highs. So that was the entry. That was an ADR hit. That was an RSI extension, straight in, straight out, same day, basically. So very rare you get a straight in, straight out, same day, but we did. So yeah, nice easy trade there. Again, this one, Swiss franc at the moment, very, very weak because they reduced their interest rates ahead of time. The market was selling into that interest rate drop before it happened. But with the uncertainty we've got in the Middle East at the moment, this move that we had here on Thursday, was a combination of Israel threatening Iran and potentially escalating the conflict, which obviously means you get a safe haven run. So we had a big strong move on the yen and the Swiss on Thursday. And it was also the Fed coming out roughly the same time saying interest rates might do that, interest rates might do that, interest rates might do that. Completely confused the market. So they basically pulled all the money out and stuck it in the Swiss franc because it's the safest place to do it. So this move here isn't really, I don't think, a bullish move on the Aussies' part. It's certainly not an Aussie, Swiss part. It's not an Aussie weakness. It's just a reaction to the news. So we'll see what happens with the Swiss franc, but at the moment, very, very weak because of its interest rate drop. However, it has gone early ahead of everybody else. So they're the first to drop interest rates, and they didn't tell us they were going to do it, as usual, which is why I'm not expecting much out of Jordan's speech this afternoon, because nothing ever gets said. But their inflation is obviously too low. They've got to reduce this, because if this comes down too fast and too hard, it's going to send them into negative GDP, in which they don't want. So I can't see it dropping quickly. They won't want to get the differential between themselves and someone like the US too big. So they will be banking on the US dropping. So if the US starts to drop, I don't think it will drop in 0.5s. It should drop in 0.25s. But if they did drop in 0.5s, for example, that takes the pressure off this, which will power up the Swissy. So it depends what happens with the US. But at the moment, Swiss franc weak. So we'll be looking for longs against the Swissy. But that is dependent on normal market conditions. If anything kicks off in the Middle East, if anything kicks off anywhere, basically this thing's coming down. So there is an argument as well for them to scale out of some of this move and just get a bit of a pullback on it before they power up for a new leg. So, you know, there's always a chance it will pull back as well. But I'm in the US dollar Swiss at the moment, a little bit underwater. Well, not so much underwater. I'm in it. with a fair few positions, but I'm in quite aggressive because we've got stuck for 2 weeks. Not really on Swiss franc strength, but on US weakness. So we've had that reversal alert go in, which I've been scaling out, and it seems to be holding at the moment. So I'm hoping we get that drop in inflation this week, and if we do, I'm out of the Swissy, and I will be, going for some serious profit on it as well. So we'll see. Aussie dollar yen, I'm going to whiz through all the yens because they're really easy. It's the same thing I've been saying for weeks, or pretty much months. If that US dollar yen pushes above 152, the Japanese will intervene and everything will come down by 2, 3, 4, 5, 6, 7, 800% of ADR within an hour. Yeah, so there will be an intervention move if the US yen pushes. So all these yens, I'd be looking for opportunities to short it. As you can see, I had one there, had one there. I wouldn't want to long it, only short, because if they press the button, it's like a nuke. You'll be down there. You're not going to survive it, basically, if you're long. So even if you use a stop loss, your stop loss won't get honored. You'll get stopped out 2, 3 times what you wanted to get stopped out, because there won't be any liquidity because they eat everything. So shorts only on everything against the yen for me at the moment, personally. Obviously, you can do what you like. It's in a massive uptrend, but it's always been in a massive uptrend because the yen's been really weak. But you're at the point now where the Japanese are going to just press a button and stop it being weak because they can. So shorts on everything. We had a lovely pushback on Thursday last week. But again, that was not the yen strength. That was the safe haven run off the back of the Israel-Iran comments and the Fed comments. So it looks like the Japanese started an intervention. Everyone was like, oh, is this it? It's like, no, this is not even an ADR. It's just not enough. It's just a move. So we'll see what happens here. That is basically what I would expect to happen next. If it doesn't, we would expect the Japanese to intervene. So CAD yen, same thing as the US yen. We're stuck sideways for 2 to 3 weeks because there's no reason for that to do that. There's every reason for that to do that. Swiss yen, same thing. We had the Swiss franc weakness off the back of the interest rates, and since then obviously it's just been sideways because the yen is just waiting for this guy to move in one direction or the other. So pound yen, same thing. We've had the reversal go in here. Yeah, we shouldn't break that level. Euro yen, exactly the same. They're all the same basically. So I've got shorts on the Euro yen and the US yen. I did have shorts on the New Zealand yen, which I got out of there on Friday. I had shorts on the Aussie yen as well, or one short on the Aussie yen as well there on Thursday. So I'm just holding those shorts at the moment, costing me a load of money. But this morning it's pushing again. So we'll see. I suspect we'll get to there or somewhere around here, and then just basically turn tail and run back down again. But if we don't, and if we break that level, it could be the week. Been saying that for weeks, but it could be the week. So that's all the yens. Aussie, New Zealand, I'm stuck in a squeeze at the moment, short. Can't get out of this one because it's just not going anywhere. Again, this is the New Zealand dollar interest rate announcement. So we've got the new announcement coming out this week, and I'm just hoping they're going to unravel this move. There's just no fundamental bias advantage for the Aussie over the New Zealand at the moment. If you look at the interest rates and inflation numbers, Aussie's sitting at 4.35 with 4.1 inflation coming down nicely. New Zealand's sitting at 5.5 with 4.7 coming down nicely. It's just no reason for it to be this strong. So I'm hoping they're just going to unravel some of this. If not, I'm just going to scale out of some. I need to put some stops in place, actually. This. So that one will come off there. And get rid of probably that one. So it's going to cost me about 3% if it pushes, but I'm not staying in it. If it's going to continue to do that, I need to just scale out, get some of that lot size off, take some loss on it, because it's just not stopping. Nothing you can do with this at the minute. It's just a grinding mess. Literally, we've had an as expected news event that shouldn't be bearish, followed by a 3-week grind, followed by a rally, followed by a 3-week grind. And that's all we've had. It's not even price action. It's just, I don't know. Never seen anything like it. It's just hideous price action. But stuck in it. Can't do anything with it. So I would do nothing but short it, because if you look at it on a 4-hour chart, and you scroll out and look at any time we've ever done anything remotely similar to this, what happens afterwards is that. Yeah, we're just waiting, timing. This is a beautiful spot we're at the moment. So this monthly high, we got the rejection on Thursday last week, and we are hovering around that level. So we know we've got sellers at this level. However, I don't think we're going to get any movement on it today or tomorrow. We're going to be waiting for Wednesday morning, which is when the New Zealand rate comes out. So hopefully New Zealand rate comes out and they decide to just do the profit take move. So you'd be looking for a pullback into the 24.72 zone if they want to bounce it and go long. But as you can see, this is a range bound pair. And there's no reason why it shouldn't be a range bound pair, because they're basically the same economy in the same area. So this is why this is range bound, same as the euro pound, same as the Aussie dollar CAD. Yeah, that's the US dollar CAD. Yeah, two economies closely linked tend to give you range bound movement. So it's just that this has just been one of those hideous moves. You will get it profit taken, and it will be 50% of it, if not more. But it's just the timing. This is the one thing we can't do in the market, is time the move. So yeah, we'll see what happens with that. But I'm going to scale out some more of that this morning. If that continues to rally, I'm going to need a good 125 ADR push. So 2 days ahead of an interest rate change, I'd be surprised to get a 125 ADR move, but you never know. We'll see. Aussie dollar, US dollar, again, completely sideways on this. We have been for 2.5 months roughly now. So we had this push down. We went into an accumulation, and since then we've just been sitting in a range. Absolutely no movement on this. Again, US dollar CPI, we're waiting for the US dollar. Most of these US dollar pairs, unless there is a real weakness in the other currency, you are sideways, because we're just, the whole world is waiting for the US dollar interest rate. And they keep pushing it back. So this is why we're sitting like this at the moment, because we don't know what to do. The market just doesn't know what to do. It needs some guidance. And if that CPI figure comes out as negative, it's going to get its guidance. And obviously the FOMC meeting minutes hopefully will reflect that. But we will see. So it's all about Wednesday, CPI number and FOMC. And obviously, if the Canadians were to do anything, that may well push the US as well. But we'll see. So at the moment, I'll be looking for shorts anywhere up here, and I'll be looking for longs anywhere down there. If we get there, because there's no reason for it to do anything else. So at the moment, we're just stuck. So I had a short there, which I got out of. I had a long there, which I got out of. I had a short there, which I got out of. I had shorts there, which I got out of. Yeah, so just play the relative strength of the instrument as normal, because that's all it's doing at the minute. CAD Swiss. So I'm going to cover all the Swissies as well together, because these are all very much the same. So fundamentally, right now, as of today, the Swiss franc is weak. Yeah, because they dropped their interest rates ahead of everybody else unexpectedly. So the only thing really fundamentally you should be doing is longing everything against the Swiss franc today. Obviously, Wednesday, that scenario could change. And at any point, we've got more talks, more peace talks going on at the moment with Israel and Hamas. Depending which news feeds you listen to, some of them will be positive, some of them will be negative. However, it's not so much about what happens with Hamas and Israel that we're interested in. It's what happens with Israel and everybody else. So it's, it's pretty obvious they're not having a problem moving through Gaza, but if they get involved in Iran or any other country, that's going to escalate the situation. If there is any escalation in war at any point, go and look at any war that broke out, any threat of war that's ever broken out in the past, you will find the Swiss franc does that, or rather everything does that against the Swiss franc, because it's the safe haven currency. When you've got times of trouble, you pull your money out of all currencies and you pump it into the Swiss franc. Yeah. So this is what we saw here. So this move, this reversal alert that we got last week was basically a Swiss franc safe haven run off the back of what happened last week. So it is either going to do that, or if there is no escalation anywhere, it's going to do that. Yeah. So at the moment, you should really be buying everything against the Swissy, because the fundamentals are the Swiss franc interest rate has dropped. Everybody else is holding on till June, July at the moment. So there should be a good couple of months of that. But again, it's all to do with news and fundamentals. So that could well change. So right now, I'd be more happy longing than shorting. But again, the caveat is because all of these interest rates at the moment are due to drop, at any point, any of these could weaken, meaning that the Swiss franc could get an edge on them. So you could well find that we sort of go into this sort of movement for a few weeks now while we're waiting for June. Maybe that the Swiss franc move against it is over, and now we're just going to happily sit there and wait for the next move to start. So it could be that there's just not going to be any more further weakness in the Swissy. Again, we'll have to wait and see. We've got lots of news events this week that can change that. So at the moment, obviously, it is bullish. Be better taking RSI extensions to the downside, ADR hits to the downside. Those would be the preferable trades to take. But if we're going to do this, doesn't matter which way you go. And that's been the case for most things over the last few months. So if you look at all these Swissies, Euro Swiss, yeah, you got to see I've got shorts there, which I got out of no problem. Got a short there. I got out of it a break even, that particular one, because it was just after the news and I thought this was going to be a bounce play. It actually turned out to be, but that short would have worked there. That short worked beautifully last week. So there's nothing wrong with shorting it. And the other beautiful thing about the Swiss franc is when it powers up, it does it very quick. Yeah, it's very energetic when it moves because there's a lot of money piles into it. So, however, if it is going to go into a grindy move, that's the way you really want to be on it at the moment. But we'll see. We'll wait and see. Pound Swiss, again, obviously it's very grindy. You can see I've got nothing but shorts on against it. No problem with any of them. There was that one there, which you would have got out of. There was an entry just about if you took the 70 on Thursday last week, but I didn't take that. So, but you can see that's been grinding very nicely. But all these little moves down that you get, these energetic moves, are all opportunities to get out of any shorts that you're in. But long term, kind of at the moment, its fundamentals are saying it's a long. New Zealand's just stuck sideways because New Zealand's been weak. A great example of what happens when you get a fundamentally weak currency crossed with a fundamentally weak currency, you get no movement. Yeah. So something that's bullish against something that's bearish will go very hard in that direction. Something that's bearish against something that's bullish will go very hard in that direction. Something that's bullish or bearish against something that's bullish or bearish just goes sideways. And US dollar Swiss, as we know. So I'm in shorts on this at the moment. This one, the price action's been a little bit more difficult to get out of. So it's just been push sideways, push sideways. Yeah, we haven't had any pullback at all on this one. So I'm hoping for negative news on the US this week. I don't need much. This is the frustrating thing about this market at the moment. Average is only 125 ADR. Yeah, it's not hard to hit that. We hit that, 23% of the time we get 125% ADR moves. So I'm not asking for much. It's just not doing it. So what we tend to get is an ADR move and then nothing. Bit of a grind, then nothing. You're just not getting an ADR pullback at the moment. There's just no fundamental reason on this one, particularly since the interest rate changed to do that. But we have had the reversal alert go in. They did power up the Swissy, so the market might now see this as an opportunity to power up the Swiss. So if you look at the market structure, it's high, low, lower, high, lower, low, lower, high, lower, low. It's really, really weak, but it is bearish. But this could well just be a flag pullback long. So we'll wait and see what happens when the 24 catches up. If I can get out of it before that, I will be out. So this is one of those pairs I will get out at break even and just go, screw you, that didn't work. And just get out, really. So that's your Swissies. Yens I've covered. We'll look at the euros. We'll just catch up on the chat. Thanks for subscribing, Raheem. Welcome aboard. Aussie dollar, US dollar, sell okay if you want to. I think you might be thinking I've got some kind of magic crystal ball that predicts direction of price. I don't. It will go up or down. So when you hit the button, your odds are 50-50. Afternoon, Neo. Morning, even. Unfortunately, there is no adult supervision with the Fed. Correct, Franco. They need an adult, don't they, in the room to stop them being idiots. And especially on the news stream. I mean, last week's news stream was absolutely classic, wasn't it? It was just, when was it? Last Thursday. CAD unemployment. That was Friday, wasn't it? Well, that was a long time ago. How much news we've had since then. Here we are. So, in March, I jotted down 2 rate cuts this year, but if inflation continues to move sideways, makes me wonder if we should cut rates at all this year. It's possible the Fed won't cut rates this year if inflation stalls at 1907. At 1907, I expect to be in position to cut rates this year. It's possible we won't do it this year, but within a minute, we will do it this year. Oh, and sorry, 3 minutes ago, we were doing it twice this year. Good one, Fed. Thanks for the really helpful guidance. Utterly useless. Complete clowns, as Franco's just put on the end of his message. Yeah. This is why you can't pay any attention to what the Fed says, because they have no idea. It's like the blind leading the blind, led by a geriatric. Basically what it is, isn't it? Joined a bit late. Have you covered US dollar yen? No. Yes, I have actually. Sorry. No, I have done the yens. Where would you target for a Japanese intervention? Probably last month's low. If you look at, it really depends what they do. So an intervention will be somewhere between typically 5 to 8 ADR. So if you measure out 8, let's measure out 10 ADR, which is 5. It's nice and easy. It's 55. 550. So that's 10 ADR. Yeah. So bear in mind the intervention will start above 152, which is there. So typically we get 5 to 10 ADR. So somewhere between there and there would be pretty easy. That is not unachievable. And that'll happen usually within about 4 hours. But go back, confirm this for yourself. Go back and look at the previous interventions. I have no idea. Obviously, I have no idea. But I can just go on what historically has happened. There's an intervention there. That one was only 300 pips, which is 6 ADR. So that was 6. But the big ones here. So that one was 550. So that was 10 ADR. And that one was 660. So about 12 ADR. But I don't know what ADR was there. Yeah, at the moment ADR is 55. ADR here might have been 70 or something. So, but it's a 550 pip move in 4 hours. It's a 650 pip move in 4 hours. Yeah, we do 55 pips on average a day. That's what an intervention is. And there's your third one, which was, to be fair, although this was an intervention, it was more of a add-on, if you like, from Japan. So that was 650. Pound Swiss has just hit ADR. Swiss franc's getting killed today. Although it's not really, is it? Because it's kind of a gap down scenario, so it's not really. Yeah, so but you don't know what's going to happen. But what will happen, if you look at it, what will happen after that move, after the intervention, is that. Yeah. So this was the previous intervention in 2022, sorry. Yes. So that's a 2022. Then we got back up to that level again. Yeah. And this is where we are now. So intervention could be like that, or that, or that, or I don't know. Intervention will be somewhere around here, but within 2 months, you'll be back down here somewhere. That will get hit, 100% guaranteed. 100% will be there. But this is the other thing about the situation that we're in at the moment. We've never had this situation. Never happened before. So I've no idea what will happen. Neither does anybody else. There's a lot of people that are saying this will go to 155. There's a lot of people saying this won't go above 152. There's a lot of people saying this won't break last month's high. And there's a lot of people saying that this will just sell off. And there's a lot of people saying that the Bank of Japan will intervene, including the Bank of Japan. But then they say that we won't intervene because we don't do that. We know you do that because there isn't anybody else on the planet that can do it. Yeah. When something moves 10 ADR in an hour, there's only one person that can do that. You, Bank of Japan, because you're the only person that can liquidate enough assets to buy that much yen. You can't turn around and say you didn't. Well, obviously they do. They turn around and they say we didn't do it. We have no comment on intervention. We are not aware of any intervention. Well, someone in your organization is, because they pressed the bloody button. But anyway, doesn't matter, does it? What happens, why it happens, how it happens, when it happens is irrelevant. What is important to us is it happens. Where it goes, no idea. So if you are short, as I am, with an average there at the moment, and this thing is down there, and I've got enough money to pay my mortgage, it's up to me if I press the button. If I think maybe I want to pay next month's mortgage as well, I might wait. That might take 2 weeks. That might take 2 hours. I have no idea. But all I can do is look at history and go, that's what's happened in the past. That might happen again in the future. But we've never been at this level before after a previous intervention that failed by the Japanese, and after they've increased their interest rates for the first time in 18 years. We've never had the US at a stuck rate for a year at the levels we're at after an 18-month interest rate rally. So this condition that we're in here has never happened before. 2022, the world was a different place. War was kicking off in Ukraine. It's all different, it's just a very different situation. But all you can do is look at history. That's all we have to go on. We will see. Morning, Peter. Any clues on pound New Zealand? We haven't got to that one yet. Are you putting sell stops? No, I'm already short. I'm not going to add any more. I'm short. I mean, you can add. I mean, yeah, if you want to. But the thing you'll find is with an intervention move, it's a black swan event. So when you get it, if you had a sell stop placed here, for example, underneath the low of Friday, yeah, and you said, I want my order executed here. If the intervention move happens, price will go from there to there within minutes. You won't get that price. You'll get slipped, probably down to something like that. Yeah. So what happens is, actually, you've asked for a price there, you get a price there, and what will happen immediately is it will pull back. If you've got a big lot size on there, you'll go into very big drawdown very quick. And you could even get margin called if you've got 1-30 leverage. Yeah. So what happens is you get the trade exactly right, but you get margin called and blow your account because you've got too much lot size on, too fast, and you weren't going to get the price that you asked for. You will not get that. That's what I say. Anybody that's long on this at the moment, if you've got a stop loss there, that intervention happens, you ain't getting stopped out there. You're getting stopped out here. So just double your loss, treble your loss, whatever. Don't expect to get that. Your broker's not going to be able to execute that order at that level. That liquidity will not be there. Imagine every single yen on the planet being bought at the same time in one order. Yeah, I don't care if you've got orders here. They ain't happening. That's the next price you can get an order. That was the last price you can get an order. Anything in between gets executed here. Yeah, so just be very careful. That's what I'm saying. If you're long on it and it grinds away, well done, you got it right. Brilliant. But if it doesn't, don't expect not to blow your account if that happens. If you're using stop losses. If you're position trading it long, up to you. Just not what I would do, but you know, you're not me. But just be careful. You know, go and look at history. You know, I'm not a rocket scientist, but I've got a brain. Yeah, this is what happens here. That's it. I'm just observing historical information. And what the Japanese have said. They said here, if you push us, we will intervene. The market dropped. They pushed up to there, and the Japanese said, one more move, and we will intervene. They pushed up to here. The Japanese said, push us again, and we will intervene. What do? Go sideways for 4 weeks and drop. They pushed up to here. What did the Japanese start to say? Push us any further, we'll intervene. What have we done? Nothing. Exactly what happened there. Exactly what happened there. Exactly what happened in 2022. Exactly what happened there. The market pushed up to this level, and the Japanese said, if you do not stop pushing, we will intervene. They did intervene. And then the market pushed back to this level. The Japanese said, if you push us further, we'll intervene. They did intervene. The market pushed back. Yeah, this is what they do all the time. So, but you will never time it. No one can time it because the Japanese are never going to tell you when they're going to do it. Why would they? If the Japanese came out today and said, at 10 a.m. tomorrow, we are going to intervene, what would happen to the US dollar yen? Faster than you could possibly blink, it would go, and there would be no intervention because it would have been undone. But what the Japanese can do is when they press that button, make billions and billions and billions of profit in the yen at one time, as everybody else that's pressed that button loses their arse. Yeah, there's no way they're telling you it's happening. You can't time it. You can get in and you can hope and you can predict and you can hold, which is what I'm doing. And it costs me a fortune to hold this position because I've got negative swaps on it. But when that move happens, negative swaps, who cares? I've made so much money, I don't care about them negative swaps. CAD Swiss, this is just the Swiss franc getting run over again. But that's it. That's where we are at the moment. Pump and dump. Yeah, but it's done by a central bank, not a crypto crook. Euros I've covered. Have I done the euros? I've lost track of where I am. We're on pound, aren't we? Yeah. So pound, odd, sideways. Guess is as good as mine. I've been playing this one both directions. Shorts there, shorts there. I had a long that I broke even there because it didn't go anywhere for a week, and then obviously it took off because I got out. Had a short there, had a long there, had a short there. Just keep doing the same thing. I'm not in this at the moment. I didn't get into this last week for some reason. Why did I not get in? Oh, I didn't quite get signal on this last week. This is one of those little anomalies where the price action basically on the lower time frame didn't give a signal until this had come out of extension. So this is kind of one I should have really taken a manual on, but I wasn't paying attention. So yeah, pound odd, you had a nice trade there, which you'd have got out of in the propulsion gap on Friday. But right now we've broken out the lows for the first time in a while. So this area here, which we've kind of been using as a support area for a good 2.5, 3 months now, we've kind of slammed out of it and broken through it, and it's just pulling and holding. So I suspect now this is ready to drop. Not quite sure why. There's not a massive reason for the pound to be weakening at the moment. There's certainly no reason at the moment for the Aussie to be strengthening, and obviously we've got the New Zealand news coming out this week. So this looks fundamentally like a nice little short play from here. So any pushes up, I'll be getting shorts on. But equally, I wouldn't mind longing it either, really. There's no fundamental bias in either direction on this at the moment. The problem with this one is because of this massive rally that we had here, now that we're out of these lows, there's no real support to speak of until we get to here. Yeah, so that propulsion move that we broke and retested there, there's not really anything you can look at in there to say there's an obvious support resistance. There's old support, which has been invalidated and broken now, which is somewhere around about 225 ADR. So it's a very difficult one to look at technically. But at the moment, it's a short. So I'll be looking for ADR hits to the upside, RSI extensions to the upside on whatever time frames you're trading. But right now, looking like a good short. Pound CAD, nice rejection at the highs. Didn't quite get the RSI extension on this one, but this is, again, lovely short opportunity. However, if you get into this now and it just does that, you got the Canadian dollar rate this week. So, you know, anything this looks like a beautiful sell. Look at the speed, but next candle will be that. Yeah, look at how quickly this is selling off. Whoops. It doesn't mean just because we've got an hour's worth of selling that this is now getting jumping short. It means that basically we're probably going to do that for a week, for a couple of days until we get the news. So at the moment it's a short, but that will change on Wednesday. Yeah, when we get the news. So we'll see what happens with that one. But at the moment, it's not really worth getting into. It's not extended enough for me to want to get in. They've done a profit take on that. They did a profit take on that. They did a kind of profit take on that. So it's just nice, orderly market structure. There's not massively extended, which is why we've got no RSI extensions. There's no real reason to jump in because it's not extended. So it is just reacting off of resistance. So this area here, that propulsion move, tested. We're just retesting. So pulling back, how far? Don't know. You got a load of buyers there, so it could well just bounce in and out of that area for 2 days waiting for the CAD news. Pound Swiss, we covered all the Swissies. Pound yen, covered all the yens. Pound New Zealand. So this one's, again, a little bit stuck. We've had, obviously, the weakness in the New Zealand dollar, which has helped it. It's a slight bull trend at the minute. We've just had a reverse alert going last week on this. And we are retesting it now. So you can see there's your reversal alert. That's the propulsion move that broke those lows. We've hit that. We've retested it and we're dropping again. So it's weakness coming in on the pound this morning. So at the minute, there's no trades on it for me. There was an entry short potentially there. You had an ever so slight opportunity for a little long there. But other than that, you had something there just about. But I've only had a couple on this, really. It's just not had enough movement in any direction to make it worth bothering with at the moment for me. But it's very, very, very sideways. So you can see this is where we were 3 weeks ago. That was our 3 week ago range. We're bang in the middle of it at the minute. So it's not, it's bullish, but again, this could all change this week. We've got the rates coming out. So if it pushes up into the highs, be looking for shorts out of those areas. Very difficult lows to pick an area. You've got propulsion move here. So this high here, that propulsion gap break is where I'd look for potentially a long test. And then obviously the news. So if they undo that news event from last month, that's where we'll be coming back to. So if they start to power up the New Zealand off the back of the unchanged interest rate, which we're going to get on Wednesday, there's no reason why we shouldn't come back and retest that, because all we're doing is we're returning back to the origin of that move, which wasn't a move. So we'll see. But pound New Zealand shorts, I think, really at the moment, but it's not really anything, is it? I'd rather get up to here and get in short than get in long. A minute. The reason being is because that pound is likely to announce an interest rate drop before the New Zealanders do, unless something changes on Wednesday. So I think there's more chance of the pound weakening before the New Zealand than New Zealand weakening before the pound, but we'll have to wait and see. But nothing much on that one at the moment. Nice rangy movement on the pound US for what seems like forever now. Basically beginning of the year. So this is November. Yeah. We're not doing anything. Moving averages are sideways. Moving averages are next to each other at the moment on the 4 hour. So the dailies. So it's just not going anywhere. So any extensions to the upside, shorts, downside, longs. We've got a lovely support area here, which is holding very, very nicely at the minute. So it looks like it wants to go long, but you're going long straight into that propulsion move from last week. So again, if you get into there, you're likely to get pushed back down. If you get back down to here, you know they're buying from this level. So you're stuck between a rock and a hard place at the moment. So ADR hits to the upside, short. ADR hits to the downside, long it. That's all you can really do. But I'd be much more interested in a big, strong move, and I don't really want to do anything on this until we've got those CPI numbers. So sit sideways and wait. You can see all the trades on this one over the last couple of weeks. There's been quite a few trades on the pound US. So we had a nice little long there. Off of there. We had a nice short there. Off of that. We had a nice long there. Off of that. So very easy, straight in, straight out. As long as something's moving sideways long term, any relative strength is usually going to get undone unless the fundamentals change. New Zealand dollar CAD, I've got longs on at the moment. This is a trade from back in March. So that was the initial entry back there on the H1 RSI extension. Push down, second entry, push down, third entry, push down, fourth entry there. So I took off those two last week. So this was an aggressive drawdown control position just because it's stuck and I wanted to get out. So I got out of that one and did some drawdown control. Still got 3 positions on, very close to break even. I'm not looking for a lot on it. I made just over $1,000 on that trade, and that loss together is about $1,000 profit in total. So if I can get out here with about another $500, that'll do. If we are still sitting around here when we get to the Canadian rate change, I'll see what the P&L is like. But what I might do is close that and just leave the single position on, because if it's going to do that, because the Canadian dollar rapidly powers up, I don't really want to be in drawdown on those two. I might as well just be in drawdown on one position, and then I can just scale into one. If I get out of that and that, which will be a break even basically if we're around about here, and it goes like that because the Canadian dollar drops, that just goes into profit. So it's a win-win situation. So I'm just going to wait and see where we are just before the CAD news. But it's just another one of those grindy pairs at the minute. We are getting a news event, nothing. A news event, nothing. A news event. Yeah, this is what the market's doing. Market structure has moved from our normal, beautiful highs and lows into news, wait, news, wait, news, wait, news, wait. So we've turned into a square market structure basically in the last 6 months, which is driving everybody nuts. But what can you do? New Zealand Swiss we covered, New Zealand yen we covered, New Zealand US dollar. This is grinding down nicely at the moment. Again, not very strong. So this is the RSI at the moment is not as reliable as usual because we're not getting relative strength moves. You can see I had a long position on there, which I got out of on news event. And we sit around, do nothing. We have a news event. We sit around, do nothing. We have a news event. Yeah. So at the moment, we had an entry potential. There was a short entry last week on Thursday, which you could have taken. But if you look at it on the 4 hour, it is bearish. So nice bounce off the 72. New Zealand dollar obviously is very weak. We know the US dollar hasn't had a massive amount of strength because it's got stuck against the yen. So we're not really going anywhere. At the moment, it's a lovely short. But we've got the New Zealand dollar interest rate announcement and we've got the US CPI. So this is one of the perfect storms this week because on the same day, we've got the New Zealand dollar rate and the CPI for the US dollar. So that day, if you get there's two things that can happen that day. The New Zealand rallies off the back of the interest rates for whatever reason, or it drops off the back of those. And then the US dollar does the opposite. And we just end up with a V-shaped recovery and we've gone nowhere. Or you get the New Zealand dollar rallying and the US dollar dropping, in which case you're looking at 200, 300% of ADR. Yeah, so whatever you do with this, if you were to get into any trade, which you wouldn't because the RSI is flat as a pancake, it's just sitting there doing nothing, isn't it? But if you were to get into anything, Wednesday is when you're going to get either into drawdown for additional positions or you're going to get paid. So the US dollar pairs, obviously US dollar CAD, as I said, you know, there's three pairs, Euro Pound, US CAD, and Aussie New Zealand, which spend an awful lot of time doing that. This is the US dollar CAD. So I've been trading this like a crazy beast. Short there, long there, short there, long there, short there. Yeah, it's just ride the RSI basically as long as this thing goes sideways. At the moment, we're up at the highs, rejecting. So yeah, looking for this rising high here, get hit in this propulsion gap. But it's all to do with the news. So US dollar CAD, tons and tons and tons of news all week. So yeah, no point in doing anything with it today because you're going to find out what's going to happen to this one with the CPI figures and the interest rates. And then obviously FOMC and then PPI. And we've got bond auctions as well. So, you know, just anything you do with this today, you're holding on until Wednesday. And we've covered those two. There we go. US dollar yen rallying. Wouldn't really call that a rally. It's had 1 hour of buyers into resistance. It's not a rally. It's an hour's price action. My friend has been watching you for years, and he showed me your channel. He's asking me to ask you about pound US dollar squeeze. Why can't he ask me? Pound US dollar squeeze? I don't know what you mean. Can't see the pound US dollar squeezing. Completely sideways. Right. That's all I've got for you today. There's not a lot else really to discuss because I've been through all the pairs. And as I said, there's not an awful lot in really looking at it in any detail until Wednesday, because this is probably one of the most important inflation figures we're going to have this month, because obviously it's 2 months before that rate drop in June. So we'll wait and see. I think it happened a while ago. Oh, what an old squeeze. Don't ask me. I don't really know what the question is, Danny. Ask me what about what? Bit of a broad question, isn't it? Been trading and testing prop accounts. They give USA clients a Flintstone platform. What's a Flintstone platform? An old platform, I guess. I don't know. Something from the Stone Age. Don't forget, the people in the Stone Age invented the candlesticks. Well, Japanese anyway. Don't worry, apparently you were stuck in it for weeks. Yeah, months. Months. Yeah, this is position trading. Yeah, look at this one, this euro pound. Yeah, I got into this on the 3rd of January. I got out of it 2 weeks ago. It's not unusual to be stuck in a position for months. Not usual, you know, probably 10% of my trades I'll be in for this amount of time, if that, not even that. Actually, that's a bit of an exaggeration. But yeah, it's a squeeze. Go and watch the Bootcamp, Danny. I don't think you've watched the Bootcamp yet, or the videos on the website about There's one called, funnily enough, How to Survive a Squeeze. And it might even be about the pound US dollar. Should we have a look? If my website decides to load. No, don't know what that was about. US dollar Swiss. Pound Swiss. Load of drawings on a chart. Don't know. But go and watch this. Oh, there you go. Pound Swiss. Pound US dollar. Is that pound US dollar? No, that's Euro US dollar. But that'll probably explain whatever. Yeah. Whatever you want to know. Don't overcomplicate it. Press the button. Deal with it. Nothing else you can do. Yeah. No one knows which way anything's going. And no matter how many gurus tell you what's going to happen, they don't know. No one knows anything about this market. It will go where the market takes it. And the market doesn't know where it's taking it because the market is not one thing. The market is made up of 11 big banks and institutions that have enough money to make these candlesticks go up and down. Yeah. None of them agree with each other. So this thing will go wherever the most money is taking it. Absolutely nobody knows that, especially not a retail trader that is on YouTube. Yeah. So what I do is get into the market and see if I'm right. If I'm right, I take the money. If I'm wrong, I change the price and wait for the market to be right. And then I take the money. Literally all I do. Yeah. I have no idea how long I'll be in a trade for. I have no idea what the swaps are going to cost me. I have no idea whether it's going to go my way today, tomorrow, next week, next year. What I do know is if you get in with a small amount of money, the market will eventually move in your direction. If you don't get in stupid trades. But there is no way to tell if a trade is stupid when you get in, because if you knew that, you wouldn't take it, would you? Yeah. So all these systems and strategies out there that everyone spends all their time hopping between, trying to find the one that works, they just don't realize that there isn't one that works. If there was, we'd all be doing it and we'd all be multi-billionaires, wouldn't we? And if I had a system that worked with enough consistency over a decade that would pretty much guarantee me making money, I certainly wouldn't be giving it to you lot. I'd be sitting in a mansion somewhere, you know, like the Greg Seckers of this world. But he hasn't made a system that makes a load of money. What he's done is made an education course that makes him a load of money. Yeah. Greg Secker doesn't know which way it's going. I don't know which way it's going. The Bank of England doesn't know which way it's going. Yeah. Market drives the market. So yeah, you will get stuck into squeezes. I'm in a squeeze at the moment on the US dollar Swiss. Aussie dollar New Zealand dollar is my worst squeeze at the moment. I'm in this thing and I got into this thing on the 1st of March and I'm still in it. We are now on the 8th of April. Yeah. This is only 4 or 5 weeks. But look what's happened in 5 weeks. It's gone from there to there. Yeah. So what's it likely to do next? That. And if it doesn't, what can I do? Get out. That's it. Now, I don't know if this is going down. I hope it goes down. And historically, when it's done something that size, it will tend to go down. If it doesn't go down, I take a loss. No different to taking a loss with a stop loss every time you take a trade, which is what most traders do. Except I don't take a stop loss and a loss every time I take a trade. What I do is I get into a trade and I wait to see where the market goes. And then I'll change my price until I'm uncomfortable. And then I will take a loss. Yeah, we're just delaying the inevitable in a squeeze, but you still will take a loss. You've got to take losses. That's what drawdown control is. I'm controlling my drawdown by getting out of the position because I'm temporarily wrong when I get in. If I'm temporarily wrong for a long time, you scale out. Even on a negative interest rate decision, I can't imagine them rallying this New Zealand dollar. a negative interest rate decision, they'll drop the US dollar. But they're not going to change the interest rates. There's absolutely no way they'll change the interest rates. Well, I say that. They've done it before, but they've done it. If you look at the New Zealand rates, and when they've shocked us, it was there the last time, which was April last year. This time, April, May last year, was when we were hitting terminal rates, and everybody was at terminal rate, or everybody was approaching terminal rate, and everyone was saying they were at terminal rate. The inflation figure was so bad for the New Zealanders that they decided to go one step further without telling us. But the market kind of knew it was a possibility because the inflation was still rallying a lot harder and faster than everybody else. A little bit like the Swiss, the market had an inkling they might drop the rates because they've done it before. They don't tell us what they're doing, and their inflation dropped so low. So it makes logical sense for them to drop the interest rate. They just didn't tell us, and they hadn't forecasted it. There is absolutely, this time round, there is absolutely no fundamental from the New Zealand perspective that says this thing could possibly go up. Yeah, that is coming down fast. No reason to do that. That is close to recession. No reason to do that. That is high and rising. No reason to do that, because if you do that, that goes up. If you do that, that goes down, which is negative. If you do that, that goes down fast. It's already coming down fast. Yeah, so there's no reason for a positive interest rate rise. Arguments for negative interest rate rise. Inflation is getting close to target. No bloody way near it. It's 2%. They're on 4.7. Your country is in negative GDP. Dropping that makes it go up. So there is an argument for doing that. Dropping it helps your unemployment as well, which is very high. So there is a slight argument for that. But this has got to be closer to target before. So there's much more chance of them dropping than rising the interest rate. Yeah. But it's just not going to happen before the US dollar. There's just no fundamental reason to do it. So the likelihood is, and the market forecast and expectation is staying the same, exactly the same as it was last time. Last time that was in the wrong place, that was in the wrong place, and that was in the wrong place. There's no reason for them to do anything different. But the thing with the New Zealand dollar is that there was no reason for the market to react like that to expected news. So this is out of the blue, no idea why you did that type move. You get it. Markets are rational. But yeah, there's no reason, I don't think, for it to weaken on an expected interest rate. There's no real reason for it to rally hard either. But because there was no reason for that, there is an argument for that, because the banks and institutions are over leveraged in profit, and they need to realize it. So we will see. It's going to be a difficult one this week for New Zealand, but you know, at the end of the day, I will just get out of some if it does go the wrong way. But I don't think it's going to go the wrong way before the announcement on Wednesday. So likelihood is we'll be, you know, same thing. We'll just be doing this until Wednesday. So 2 days worth of that, and we'll see. But who knows? How do I get the fundamental report? It's on the website. There's a load of links going along the bottom of the screen. Yeah, go to fundamentals. There's a load of fundamental information on there. As in rallying against it. Yeah. I'm so heavy into it, I'll probably have to stay up until 3 on Wednesday to make sure things don't get out of control drawdown-wise. The trouble, if things are out of control drawdown-wise, the trouble you're going to have on Wednesday, if you're in deep on it, I will be leaving stop losses in place overnight because I will be asleep when that happens. If it does that, I have to get out. If they widen the spread and then it drops, I still have to get out. I can't not have that safety net in place. If it gets triggered by the arseholes in the brokers, it gets triggered. There's nothing I can do. Staying up late isn't going to help me, really. But we'll see. You know, you might get a shock. They might suddenly do that. There could be leaked information coming out. There's all sorts of things that can happen. You know, the markets move unexpectedly for what appears to be no reason at all. Yeah. So, you know, you could have someone in Barclays sitting here now going, guys, we've got the interest rates on Wednesday. What's your P&L sitting like? And they go, 2.7 million. Okay. What's the likelihood of anybody else? You heard anybody else is going to jump ship soon? No. All right. Well, should we just bank that in anticipation of HSBC pumping it against us or pumping it against us on Wednesday? And they might just go, yeah, screw it. All right, we'll unwind that lot today. And all of a sudden you'll be like, bang, bang, bang. You'll be sitting at 175 ADR a day before the interest rate comes out. For no other reason, the banks decided to bank some cash because they don't know what's going to happen in New Zealand. They do not know what the interest rate decision is going to be. What they know is what their P&L is. That's it. Don't forget, banks and institutions are speculative traders. They're sitting there. Job is making money. If you're sitting there with a ton of cash in P&L when an unexpected news event is going to come out that last time made the market do that for no reason whatsoever, you have a 50-50 chance of your 2.7 million getting bigger or vanishing. What would the sensible person do? Take 2.7 million or some of it at least off the table. So this is why, you know, and this is where all the rumor mills start. 2 days before some news event comes out, the market suddenly rallies 300 ADR and everyone's like, it's been leaked, it's been leaked. No, it hasn't been leaked. It's just the market is preparing for the news. They want to get into the right position for them institutionally. And that may be that they need to unwind or pile into a load of positions ready for the news event. They don't want to do it on the news event because the liquidity will be there, but it will be all over the place. If you want a guaranteed order execution, you can do it today. If you want a variable order execution, you can do it at 3:30 on Wednesday morning. You're going to take the orderly one, aren't you? So, you know, you might find we get this sort of movement, which is what the Swiss franc's done many times before. You know, and other instruments have as well. But we'll see. You know, nobody knows where it's going. It goes where it goes. Your job is to manage your portfolio, your P&L. And if your P&L is too deep, your job is to reduce that drawdown. That's it. That's your job. Your job isn't to have a crystal ball and know what that's doing. You can't do that. What you can do is control your lot size, your risk, and where you get out. That's it. They're the only two instruments you have at your control. Lot size, exit. Yeah. These red lines and these grey lines are the only thing I've got. No other indicator on this chart is going to help me. It's news. Watching you all this time, I've become a chart counter, like a blackjack advantage player, able to scan a chart very quickly and see if any opportunities or just move on. Yeah. I was taught that very early. Well, not that early, actually, but the strategy that I used to trade using the moving average shadow was really simple. And this was on a 5-minute chart, which I haven't got it on a 5-minute chart, but it's the same principle. If you're between those two, look for longs. Yeah. So it's really a case of every close of candle just going like that. No opportunity. No opportunity. No opportunity. Oh, no, there is an opportunity, but that's range bound. Nearly an opportunity. Nah, should have taken that on Friday, but missed it. That was a Friday entry as well. Yeah. That's your job, looking for setups. You do that. When you've done it and you haven't found any, or you have found any, that's it. That's trading. problem everybody gets into is they go, there's no trades there. Let's see if I can get into something else. It's the itchy trigger finger problem. That's where everyone goes wrong. Yeah, if you've got a strategy that works, like RSI extensions, if there isn't an RSI extension, there is not an entry. That's it. Simple as that. Which is why I built the dashboards. It's the whole reason I built the dashboards. I don't have to flick through any charts. Is there an opportunity to go short at the moment on the EuroCAD? Yes. Is there an opportunity to go short on anything else? No. Therefore, the only thing I can do in this 4-hour period is go there and press that button. Ta-da! I'm in short on the EuroCAD. Simple as that. Remind me of why I took that. Almost an hourly. It's a lovely resistance bounce, so I don't mind taking it either. Scaling will be there. Perfect. Yeah. But you see what I mean? It doesn't matter. I've just done this trade live, going short, because we've had a 4-day rally. We're up at resistance. We've got a backup resistance monthly, which is up at ADR. And we've got Canadian dollar news coming out this week. It's also extended on the 4-hour RSI, so it's due a pullback on that leg down to there. But that's how easy trading is getting in. One of two things is going to happen. It's either going to do that or it's going to do that. If it does that, the EA is going to manage the position for me. If it does that, I'm going to get out with profit. I have no clue which way this is going, do I? But I know that when you get up to there, typically what happens is we get that. When you get down to there, we typically get that. We're up there. So it's only one way I'm going to trade it. That's your job. That's why I built the dashes, because it makes your life so much easier. If you want to trade ADR reversals, New Zealand dollar Swiss is your baby today. Get ready to hit that short button. Drop down M5. Wait for the reversal alert to come in. Or whatever entry criteria you want to use. Doesn't matter what your signal is. Use dashboards. Use automation. That's what it's all about. US dollar Swiss rallying. What's that US doing? Getting close. So ADR today is 152.075. So that's our line in the sand at the moment. We are very close. What we got? 7 pips. So less than a quarter of an ADR from potentially getting over the line. See if there's any news out of Ueda, semi-annual report in Bank of Japan. Governor Ueda to give semi-annual report in diet from 1 p.m. on Tuesday. He's going to give us an update on his diet. Doesn't particularly look like he needs to go on a diet to me. I don't know. Anyway, apparently he's given us an update on his diet tomorrow afternoon. I was just seeing if there's any more rumblings out of Japan. So there's nothing at the moment. So just be aware, if we do get up to here, you might start getting some news coming through on Financial Juice. I get the feeling now we've had enough warnings. If they're going to do it, I don't think they'll give us. I don't think we'll get another warning. I think it'll just be there. It'll be done. So we'll see. Either that or the market will just rally off the highs very, very aggressively. Yeah, they're selling it. Every time you get there, you get an aggressive rally off. Yeah, we're back up here. You just grind your way back, and then bang, aggressive rally off of it. I'm waiting for that. This is what I keep saying about the CPI figure coming out on Wednesday. If that CPI drives the US up, it's going to be like a rocket hitting a brick wall. See. Anyway, I reckon he's a vegetarian. Yeah, it doesn't look like he needs a diet. I don't understand. I've had this before as well. I remember commenting on this before. I think this is some kind of translation issue because I've seen the word diet come out about the Japanese before, and it was as confusing then as it is now. It's like, what are you on about? There's obviously some word in Japanese that is close to diet, which is his annual report. That's something else on Tuesday, but it's certainly not to do with his diet, is it? Because he certainly hasn't got a big waistline. Or maybe he's malnourished. Maybe he needs to eat more. He's going to update us that he's going to eat more carbs. I don't know. We'll see. Waiting for the news. So there's nothing much else to really look at today because, as I say, I've covered every pair and it's all about the news this week. So I'll be back on Wednesday. So I'm having tomorrow off. I'm going to get on with some analysis work and other stuff tomorrow. So there's no stream tomorrow because we have no news. So as long as there's no intervention from the Bank of Japan, I mean, if anything happens big, then I might just quickly schedule a stream in and do one anyway. But tomorrow there is absolutely no news. So we've got the Jordan talking this afternoon. Probably not going to do much for the Swiss franc. We've got absolutely no news tomorrow, and then it all kicks off with New Zealand dollar. So I will update in Telegram and Discord if I see anything interesting or exciting, but I think it's just a case of sitting there for 2 days, basically, now waiting for all the news to come out. So any ADR hits are probably worth shorting, because if anything gets outside of ADR, it's probably going to mean revert before the news events come out. So ADR strategy intraday, if you want to take it, it's probably the best thing to do. But if you're going to do that, I would just use stop losses. Don't try to get into new positions. There's no point because it could all flip this week. So any intraday short-term plays using stops, keep yourself occupied is probably the best thing to do. Right, that's it from me. So I'll be back on Wednesday at 1:15, and then we will look through the New Zealand dollar news and see what's happened to that. And then we'll obviously be preparing for the CPI numbers and the Bank of Canada announcement in the afternoon. So that's when I'm streaming next, 1:15, and we'll see what happens there. All right, so have a good day. Have a good day off tomorrow. Well, don't have a day off. I'm not having a day off. I'm just still be doing stuff. But yeah, have a hopefully profitable couple of days. And if I don't see you before, I will see you on Wednesday. Have a good couple of days.